Hey, it's Rav. Welcome to the Everyday Investor TV show, the show that teaches all of us how to grow our money. Each week, we bring in an everyday expert to teach us, everyday people, a different strategy. Remember, whenever you're offered any type of investment opportunity, you always want to ask 4 questions. 1, what is the return on investment? 2, when do you get that return along with the money that you put in? 3, what is the minimum investment amount needed? And 4, what is the risk? What is the downside? The reason we do this show is because often the challenge is that we take our precious time, we go to work, we get paid in order to provide. You ask, what's the challenge? Well, if we have a job, we're blessed. I really believe that, but wouldn't it be great if money could make us money? You could take that precious time and you could spend it with family, friends. You could engage in a purpose that's greater than yourself, still keep your job, have a hybrid of both. Thanks so much for watching. Don't go anywhere. We'll be right back. Coming up, we're talking to Lee Pollock and Sarah Larbi on joint venture relationships.
So we'll go out and we'll qualify the property. We'll make sure it's a good project. It's a good donor property, that it's going to kind of check all the boxes as far as from a legal standpoint, how many units we can put in there, kind of the reno budget as well, timelines. So we'll go and we'll qualify it. We'll run the numbers. We'll usually lock it up under contract. And then we'll kind of put the feelers out there to see who wants to jump next.
Hey, it's Sarah Larbi here. Did you know that if you are selling your home or investment property, one of our preferred agent partners will sell it for you for free? That's right, 0 commissions. Head over to our website, everydayinvestor.com, to find out more.
Hey guys, Kyle Ford from Canada's Mortgage Choice. This message is for all my business owners. Are you struggling to get financing? Maybe you have a great accountant who does an awesome job of showing a good low income that reduces the amount of taxes you have to pay on an annual basis. But what is the impact to your financing? There's 2 options here. We can pay it in interest or pay it in taxes. Did you know that there are alternative lenders who will qualify your financing based off your business revenue, not your personal net income? This is a decision that you want to weigh with your accountant, legal teams, and mortgage financing professionals to determine what is the best structure and overall cost to you based on how you flow and claim your income. Myself and team here at Canada's Mortgage Choice would love to be a part of that decision and a financial professional helping you on the advice. Don't hesitate to reach out.
Hey, it's Rav. A few years ago, I learned how to trade stock options by taking the Theta trading course. My son, my friends, myself, all of us benefited immensely by applying their strategies, and I want you to have that same benefit by taking their course as well. I'm not receiving any monetary benefit whatsoever by telling you this. It's just that, as you know, I believe that knowledge mitigates risk. Visit their site to find out more. Hey guys, welcome back. It's Rav Toor, Everyday Investor TV show. We're talking to my good friends Lee and Sarah, and we're talking about how we can make money in joint ventures. Guys, great to have you on the show.
Thanks very much.
Yes,
hey, thanks,
Sarah,
Rav.
you're at the cottage, and Lee, you're in Burlington.
I'm in Hamilton, actually, in my office.
Oh, you're
And
in Hamilton.
I'm actually in Oakville. I went up to the resort to do an appraisal today, and I ended up being crazy and decided to come back and forth in one day. It's like 6 hours of driving.
Well, hey, good thing you're driving a Tesla. Speaking of Tesla, you know, if a lot of us are down on it, but if you would have bought it a few weeks ago, you would have been 100% on your money basically right now. No, it's great to have you on the show. We want to talk about this concept of joint ventures. Sarah, what is a joint venture? Maybe you can explain exactly what it is.
Yeah, I mean, it's a form of partnership. Again, you could slice and dice it however you want, but very often how we do it, there's usually an active partner and then there's a passive partner. The active partner finds the deals, they manage the renovations. As an example, if there's renovations, the tenant placement, So they do the active stuff, and then there's a passive partner that maybe they don't have a whole lot of time on their hands or experience, and usually they're the ones that hold the financing or bring the capital in. As an example, it doesn't have to be that way. There's many ways that you could do it, but that is probably the most common type of strategy setup.
Yeah, and I think with you guys have your business partners and you're doing multiple investments. Lee, I don't think you need someone like Rav to come in and put on a hard hat and grab a hammer. You've got that part covered, yes?
We have that part covered, but we look for passive. Want to deploy their funds and trust us to get the job done and kind of move on to the next one after we finish the first. Or sometimes we actually have a few partners that will do two projects at a time. Yeah,
at the same time. So basically, what you guys are doing is you do projects on your own, just the two of you, and then you also open it up for bigger projects where someone like Rav and friends can come in. We're the money partners. Often we also go on title. You guys do the oversee the work, do the work, oversee the work. You're the expert partner, and then we kind of split the profits. Generally speaking, I know it depends, but generally 50-50?
Pretty much it is 50-50 on the smaller stuff. So anything from like the single family, not that we do that, but from a single home to up to 4 units, we're equalizing at the end at 50-50. And then the larger stuff, it really depends on the deal itself.
Okay, and then so let's do a typical, what's your last one where you had partners come in, even if it's active. Give me an example of a deal that Rav can look at, and where is it? Where would it be located? This just the last one that you've done.
So we purchased for about 700,000 and spent about 150. It was more of a cosmetic job, so about 150,000 renovations, and we ended up refining for just shy of 1.1.
Wow.
Yeah.
And how long did that take?
They bought that house in, I think we closed it in the end of March. And then by the time they received their money, it was a little bit different with that one because the JV partner had some, they had a few things they had to take care of themselves. However, the project was ready, delivered, the financing was approved, everything was ready to go. I want to say it was June, July. So It was a pretty quick one. However, we didn't exit that one until, Sarah, was it November?
Yeah, October, November. But that's like the one that we did with the refi. Like we still have a handful of them in different processes of like renovations and that kind of stuff as well. So, but yeah, I want to say probably October.
Yeah, we had that one ready to go where we, to no fault of the client, they had a few things on that they had to finish with their previous tax year. So there was a little delay on their end. No issues, no problems. It was just an oversight on their part. However, we hit everything. Like we checked all the boxes. So we landed everything right on time, on budget. Everything was perfect on our end. So big pat on the shoulders for that one.
So
the numbers really worked on.
If that was Rav, let's say I was the investor in that, I went on title, I bought this property for $700,000 in Hamilton. Who found it? Did you find it or did Rav find it?
No, we found that. So we'll go out and we'll qualify the property. We'll make sure it's a good project. It's a good donor property, that it's going to kind of check all the boxes as far as from a legal standpoint, how many units we can put in there, kind of the reno budget as well, timelines. Logistics are very important on these projects too, because logistically you can't always do what you want to do due to geographics where the property is located. So we'll go and we'll qualify it. We'll run the numbers. We'll usually lock it up under contract, and then we'll kind of put the feelers out there to see who wants to jump in there.
So that's great. So you are finding it. You're going to do it without Rav anyways, perhaps, because there's other Ravs out there. But you kind of show it to a few of your investors. I mean, do you have a database, or how does that work? When you see a great opportunity, how do you pick who's your JV? Is there a database and you just send it out to everybody and first come, first serve, or how does it work?
It's kind of like who's next, who we've been talking to and showing the most amount of interest. And who's kind of, we put it out there to that individual. And if they want to jump, then we'll go with it. If not, it goes to the next person.
And so in this case, I bought that property, $700,000. I put 20% down, I guess, because it's an investment property. So that's 140, call it 150,000. Then I put 150,000 towards renovations. So I'm out of pocket, or my investment amount rather, is 300,000 in this particular case. Yeah?
Correct.
Okay. And then you did your magic, and in less than a year, 6, 7, 8 months, it was appraised at 1.2. Is that what you said?
No, just shy of 1.1. The exact figure was $1,085,000.
Okay, so about 1.1. So we lifted this $400,000, although I put in 150. So we cleared over $250,000, and then you're able to split those returns with me, whether we hold it, and this will be predetermined. Obviously, the exit. Is that right, Sarah? The exit is predetermined. When I get into the deal, we're going to flip it, we're going to hold it, we're going to hold it for 2 years, 5 years. Like, will I know all that in advance?
The exit. So we usually like to keep, a deal for at least 5 years, and then have that discussion every year. Do we want to keep it? Do we want to sell it? Does one person want to buy the other out? But these, investing in real estate, I mean, it's definitely not a short-term game. And so we do like to be, at least medium to long-term, and longer for the bigger stuff. But usually what it is, we estimate, again, we never know exactly when the permits are going to come in, but we estimate about a year for the majority of these conversions that we're doing, or the majority of the renos, unless it's like a smaller project like this one was. And so if we're getting in, we're refinancing in about a year's time, potentially less, and then we hold for 5 years from there.
And so in this case, again, my investment amount was $300,000. You lifted it to 1.1. Did we refinance, Sarah?
Yeah.
We refinanced, and then how much did I get back in that refi of the 300,000?
Lee, this is where your math is good.
So on the $1,085,000, less 80% loan to value, minus the purchase and the construction, I want to say it was very close. I think we were all pretty close to all out. Maybe I think there was about 10 or 20,000 left in the deal on this one.
No, really?
Yeah.
So you're saying my investment amount was $300,000, and I pretty much on the refinance got that $300,000 back, and now it's just a property that I have very little, if any, money in, but I'm enjoying 50% of appreciation, debt reduction as tenants pay the rent, and some cash flow?
Yep.
Wow.
That's what I'm saying to you.
I like your style. And so, how many joint venture projects? I mean, because I know, Sarah, you've done many on your own. Lee, you've done on your own. But as business partners now for a year or two, how many joint venture projects have you done? Meaning you guys are doing a project together and you have investor money injected as well. Roughly, ballpark.
Well, Sarah, do you want to answer that?
I don't know, 10.
10 projects. That's
around
great.
10 in a year. And I guess 10 in the last year, because we've known of each other, I guess, in passing, but we've really only started partnering together really like a year ago. No,
it's fantastic. Listen, it's really great. I mean, the biggest companies in the world, Apple has partners. Like, this is not a new concept, right? We can do it on our own, perhaps, but it just makes more sense. We can do more properties, the more partners that we have. And then somebody who wants to be passive, yours truly, can enjoy great returns with people who don't mind being the expert partner. So, no, this is great. Let's take a look at even more of the numbers, some different types of properties, asset classes that you guys are doing when we come back. We'll take a little quick break. We're talking to my friends, Sarah and Lee and Sarah. Don't go anywhere. We'll be right back.
Hey, it's Sarah Larbi here. Did you know that if you are selling your home or investment property, one of our preferred agent partners will sell it for you for free? That's right, 0 commissions. Head over to our website, everydayinvestor.com, to find out more.
The mortgage world has changed. Has your advice? Are you looking for a modern approach to your mortgage planning process? Advice tailored to your unique, ever-changing circumstances? Whether you're upsizing, downsizing, purchasing, or refinancing, the Kyle Ford Mortgage team works with individuals and companies to custom tailor the right mortgage product for you. Working with a wide selection of lenders, we're here to serve our clients and help them achieve their real estate and retirement goals. Contact the Kyle Ford Mortgage team today, Canada's mortgage choice.
Hello everybody, Everyday Investor. I'm Costin Vellis, and as you guys know, I'm the founder of First Access Condos, bringing the Everyday Investor clientele the best pre-construction opportunities in our city. Now I got a gem coming up, a diamond, LSQ, master plan community, 6 residential towers, 3 commercial, ground floor retail throughout. And if that's not exciting, I'll give you 2 more points that makes this spectacular. Located at the center of the GTA, in my opinion, the real center, where the 401 intersects the 404 DVP. And if that's not enough, okay, it is located in the Consumers Road Industrial Park, right in the industrial park. This is the 2nd largest employment hub in North York, 20,000 full-time jobs. In the next decade, that's gonna get bumped with another 15,000, bringing us to 35,000 jobs right at your doorstep as an investor. This is one of the best opportunities I've seen in a long time. It's gonna be priced fantastic. I've been in talks with the developer, done a site visit, know the area very well. You have transportation, you have employment, you have everything you need to make money. First Access Condos, don't be second.
Hey, it's Rob. Welcome back to Everyday Investor. We're talking about how we can make money, joint venturing, partnering. We're talking to expert renovators, investors, coaches, Lee and Sarah. Guys, great to have you on the show. Let's talk about actually that coaching part, because I know that you guys do that. There's people that are, hey, we want to be active investors. We don't want to just be passive investors. But we want to be able to learn how to do this ourselves. We live in Alberta, we live in Ontario, we live in Hamilton, Oakville, but we also want to be able to see if we can do this. Talk to me a little bit about your coaching program. And also, it's not just what we've been talking about thus far. You also have, you specify whether it's midterm rentals. And so, yeah, talk to me about that. How does the coaching program work? And your information's there on the screen. Are you running them every 6 months, every month, or yearly? Like, how does it work?
Yeah. So right now for 2023 that we're doing the Real Estate Investing Academy. So this is for anybody in Canada that wants to get a good fundamental of all the different strategies that we think will work, this year and beyond. So we're talking about the BRRRR strategy. We're doing some buy and holds. We're talking about the commercial conversions, multifamilies, a lot of, midterm, short term as well. So it's actually a mixture of Zoom calls. And then there is an in-person option for those that do want to do the in-person. And so they could go to our website. We'll put it below, and then just the Real Estate Investing Academy. They can join anytime. Obviously, the earlier in the year they do join, they can actually be part of the live sessions, and then it'll be recorded and it'll be evergreen content moving forward. But we're really, helping investors, because I don't think that you can just know one strategy anymore. I think it's about pivoting, and as the markets shift along the way, figuring out what the next best option is based on your goals and your time horizon and your money and all that stuff. So, the BRRRRs, even where they were working 5 years ago and how they were working 5 years ago, or not, how it's best done today. And so it's important to know how to pivot and add different strategies along the way to get to your goals. So that's what we're really covering, is the fundamentals of all the strategies that work well, and then the support along the way, so that people are comfortable taking action and have access to our expert teams as well.
And also, I think, let's say I want to invest passively with you guys, but kind of want to see what you're doing. Lee, you guys sometimes you do tours where you look at different properties. Tell me a little bit about that.
Yeah, we do. We set up tours for properties that people are interested in, let's say, looking at that we pre-qualify, whether they be your residential and or commercial. So we'll take small groups to go look at them, and then we also have a number of projects that we're working on. Not only our stuff, meaning Sarah's stuff and mine that we're working on collectively together. As partners, but we also have another side that we do construction for clients. We're always happy to bring people out and show them, what they're getting into, and they range from big and small, and all different stages. Some people love it. I mean, it's a different experience when you're actually going on site and you're seeing a construction zone. You're seeing what something was and what it's going to be and what it's, or what it is now. It's very different.
And, again, yeah, I can look at, hey, I'm interested in this. When this comes up, kind of give me a call. How is it structured legally, Sarah? How do we structure this joint venture partnership? Rav's on title, Rav's the money guy. You guys are the expert people in terms of, making all this happen. What is it? How do is it just a handshake and a napkin, or is there a legal agreement that we're looking at?
There's a legal agreement that was drafted by our lawyers that both sides would have lawyers review, that has the share structure, contingencies, what happens in different scenarios, and the shares of who owns what. So it is important not to just do the handshake deal, because you never know what's going to happen in the future. He said, she said is not going to go as well. And at the end of the day, hopefully it's just like a marriage, right? You want to have the right people, you want to have the right partners on both sides, but it's like a guide that if something, does happen, that you can refer back to just to see, what is the protocol should something like this happen. If, for example, one person wants to sell and the other person doesn't, then what does that look like? Or, if there's a misfortune, like somebody passes away or whatnot. So it's just important to have all of that kind of stuff as much as possible laid out in the beginning.
And, of course, when you're, if I'm doing something, if Rav is investing in something with my own money, it's up to me to do what I want to do. If I'm partnered with somebody and I'm the expert partner, I'm a lot more careful because it's somebody else's money involved. And even more so, it's a friend, it's a family member, or it's somebody I don't know, but I get to know because, I don't mind mixing business with pleasure. I know with you guys, I mean, if you're doing it on your own, that's one thing, but have you ever with investors, have you ever had a deal go sour? Whether it's on your own, whether it's coming together collectively, have we ever lost an investor dollar?
Lost an investor, no, but decided to, let's say, not go forward or have one person buy the other person out just for a difference of opinions, life circumstances that happens too, believe it or not. So yeah, that's happened. As far as like full blown, I don't want to say where it's anybody's in court at, there's been no, we're not in court. Like no one's gone to court or anything like that. But usually things are worked out, amicable. And they're usually due to, like, you, Rav, might decide you want to come in and, be partners. And today everything is great. Everything's amazing. In a month from now, circumstances may change for you. You don't know that. Nobody knows that. Nobody has that crystal ball. But we're all human, and we all have to collectively put our heads together and decide what's best for everybody without hurting people.
Yeah, and more, I mean, that happens for sure. More, I was talking about an investor dollar, meaning, have we ever had a project go sour, where our investor didn't even receive their principal back? But, I'm asking you that because I know the answer. We've never had an investor dollar go sour, right?
And we're also not doing things that, like, we're not flipping, we're not doing, like strategies that are more speculative. Like we're looking at this from a long-term perspective, right? And so all ultimately, at the end of the day, like, are you going to get all your money out on the first refinance? I mean, I think those times have come and gone. I think it's just important to be realistic with, the partners that we partner with and we bring in as joint ventures, because there might be in that 5-year timeline, a first refi and then a second refi down the road to get, potentially the rest out at that point. So I think it's just important to set the right expectations and just to be on the same page with what that looks like. But in terms of like losing, I mean, again, like where you probably lose at this point is people that bought in the height of the market and they're flipping and that was the only strategy that they had and they didn't have a backup, or people that did, the buy, wait and sign strategy, which I'm not a fan of personally. Again, everyone's got their own strategies. But, if you don't intend on closing on something and it's not going to cash flow at the end and you just expect to sell the contract, again, that's a little bit more of to me, that's more of a higher risk type of thing. So I don't play in that market. Again, not that it's right or wrong. It's just not my strategy.
These are markets, right? And very much like any other market, when the market's going down or things are changing, you don't panic and sell everything because that's when you take your biggest losses, right? I don't play much in the stock market, but I know enough that if the market's going down, that would probably be the time that I would want to invest into it, not pull out. Mm-hmm. I don't think the real estate market's different. I think if you have one thing, meaning, one house and one apartment and you bought it at the height, you have very, very limited strategies. That's not what we do.
No, that's good. So what's next? Like what's a couple of projects that you're looking at, you're doing your due diligence on that you might, release to potential investors? What are we looking at right now? What are we liking right now?
Sarah?
I mean, we still like the 2.5 stories, the 2.5 story buildings that can be converted into, a few units. We still like the commercial conversions. I mean, we're always looking at those. I think we took a little bit of a pause as my resort is, coming to fruition and Lee's getting ready to take some time off and some vacation. But, like those are always great. And actually the prices for them are much lower than they used to be back in the day. And, we're working on our commercial conversions and, looking for more opportunities, definitely. But at the end of the day, I also want to say it's also, it's not always about acquiring. We still also want to enjoy, our lifestyles and vacation. Like I literally went on vacation for 1.5 months and then I came back. And so it's, sometimes it's just fun to do a little bit of work and we're starting a company, midterm rental, a whole midterm rental strategy and a company behind it. So we're actually kind of pivoting in a few different things and just making sure that we're taking vacation along the way.
Okay, perfect. Well, listen, guys, thank you so much for being on the show. Your information's there. People can get a hold of you, whether it's to get some coaching, whether it's to joint venture with you and actually invest. But thank you so much for being on the show with me. Really appreciate it.
Thanks so much.
Thanks, Rav.
And thank you guys at home for watching. Without you, we would not have a show. If you want to get these episodes directly into your inbox, go to everydayinvestor.com and sign up. Until then, we'll see you next week. Same place, same time. Honey, I love you. I'll be home soon. God bless everyone.
Hey, it's Sarah Larbi here. Did you know that if you are selling your home or investment property, one of our preferred agent partners will sell it for you for free? That's right, 0 commissions. Head over to our website, everydayinvestor.com, to find out more.
The mortgage world has changed. Has your advice? Are you looking for a modern approach to your mortgage planning process? Advice tailored to your unique, ever-changing circumstances? Whether you're upsizing, downsizing, purchasing, or refinancing, the Kyle Ford Mortgage team works with individuals and companies to custom tailor the right mortgage product for you. Working with a wide selection of lenders, we're here to serve our clients and help them achieve their real estate and retirement goals. Contact the Kyle Ford Mortgage team today, Canada's mortgage choice.